This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices gained slightly during early trade on Monday, boosted by concerns conflict in the Middle East may impact supply in the key producing region and expectations the U.S. interest rate cut last week will support demand. Brent crude futures for November were up 20 cents, or 0.3% at $74.69 a barrel at 0045 GMT. U.S. crude futures for November were up 22 cents, or 0.3%, at $71.22. Both contracts rose in the previous session on support from the U.S. interest rate cut and a dip in U.S. supply in the aftermath of Hurricane Francine. Oil prices climbed last week for a second week.
U.S. energy firms this week resumed cutting the number of oil and natural gas rigs after adding rigs last week, with the count falling for a fifth week in 6, energy services firm Baker Hughes said in its closely followed report on Friday. The oil and gas rig count, an early indicator of future output, fell by 2 to 588 in the week to September 20th. Baker Hughes said that puts the total rig count down 42 rigs, or 7%, below this time last year. Baker Hughes said the number of oil rigs was unchanged at 488 this week, while gas rigs fell by 1 to 96.
Moving on to the top news in the energy sector.
Surging small-scale renewables generation is helping China address growing power demand and slashing the role of coal in the country's power mix, but Beijing's widely followed monthly data reports omit output from the fast-growing sector. Data from the National Bureau of Statistics, NBS, which publishes monthly bulletins on key economic indicators, only surveys industrial firms with at least 20 million yuan, $2.84 million, of annual revenue from their main operations. For the renewables sector, that has resulted in the NBS leaving out a significant chunk of generation from small-scale sources powering residences, offices and industries, making it more difficult to gain insights into China's economy.
Indian state government-run Odisha Coal and Power Limited, OCPL, is looking to sell surplus coal from its mine in eastern India at a discount, an auction document showed, indicating lower demand for the fuel in the country. OCPL will auction 3 million tons of its surplus coal via online auctions on October 4 for power plants at a 15% discount to the base price on the National Coal Index, according to an auction advertisement in the Times of India newspaper on Sunday. India's total domestic coal production rose 7.12% from a year ago to reach 370 million metric tons between April 1 to August 25, according to Coal Ministry data. Next, we have the top news in metal markets. The U.S. Energy Department said Friday it plans to award $3 billion to 25 battery manufacturing sector projects in 14 states as the Biden administration works to shift the supply chain away from China. The projects will increase domestic production of advanced batteries and battery materials and follows the adoption of U.S. EV tax credit rules to shift battery production and critical minerals away from China. The awards fund battery-grade processed critical minerals, components, battery manufacturing, and recycling, and will generate $16 billion in total investment for the projects and support 12,000 production and construction jobs, the department said.
London copper prices opened higher on Monday, helped by signs of better demand in top consumer China and falling inventories, while most other base metals retreated as the US dollar firmed. 3-month copper on the London Metal Exchange was 0.3% higher at $9,508.50 per metric ton by 0157 GMT. The most traded October copper contract on the Shanghai Futures Exchange was down 0.4% at 75,430 yuan a ton. Copper prices hit their highest levels in 2 months after the Federal Reserve kicked off its monetary easing cycle last week with a larger than usual half percentage point reduction.
We will now look at the top news in the agricultural sector.
Chicago wheat futures gained more ground on Monday, with prices supported by dry weather curbing production prospects in Europe and other exporting countries. Soybeans rose for the first time in 3 sessions, underpinned by dry weather delaying planting in the world's biggest exporter Brazil, while corn edged higher. There are some issues emerging which could impact wheat supplies going forward, a Singapore-based trader said. But for now there is plenty of wheat coming from the Black Sea region and it is cheap.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.